Economic Substance Regulations. What is the Economic Substance Regulations? On April 30, 2019, the UAE Cabinet issued the Cabinet of Ministers Resolution No. 31 of 2019, concerning economic substance regulations in the UAE. The regulations, requiring all in-scope UAE entities, relevant entities, that carry on certain activities, relevant activities, to have demonstrable economic substance in the UAE from April 30, 2019. Who is subject to the regulations? Regulation apply to all UAE onshore companies carry on a relevant activity. All free zone companies carry on a relevant activity. Regulation not apply to entities that are directly owned by the UAE government, both federal and local. On this basis, UAE sovereign investment funds and other UAE government-related entities. It is yet to be confirmed whether the regulation will also apply to sole proprietorships and branches, but we expect entities incorporated under offshore, free zone, companies regulations that carry on relevant activity to be within the scope of the regulations. Under the regulations the following consider as relevant activities: banking, insurance, fund management, lease finance, headquarters, shipping, holding company, intellectual property, IP, distribution and service center. What are the economic substance requirements? To satisfy the economic substance requirements in relation to a relevant activity, a relevant entity must conduct the relevant core income generating activities in the UAE, be directed and managed in the UAE, and, with reference to the level of activities performed in the UAE, have adequate number of qualified full-time employees in the UAE, incur an adequate amount of operating expenditure in the UAE, have adequate physical assets in the UAE. A relevant entity that only undertakes a holding company business will be subject to less stringent economic substance requirements. Additional requirements apply if a relevant entity carries out high-risk IP-related activities. If a relevant entity carries out more than one relevant activity, the economic substance requirements must be met for each of the relevant activities. Outsourcing to third-party service providers. The regulations allow a company to outsource some or all of its activity to third-party service providers. However, these service providers must in their own right have adequate presence in the UAE. And the company must be able to demonstrate that it has adequate supervision of the outsourced activities. Support from service providers cannot be double counted if the services are provided to more than one relevant entity. Reporting requirements. A relevant entity will be required to report certain information on its relevant activities on an annual basis to the relevant regulatory authority, being the authority that issued the trade license to the relevant entity. Existing entities must comply with the regulations from April 30, 2019, with the first return due in 2020. New entities must comply with the regulations upon receiving its trade license, with the first return due in 2020, or later. Offenses and penalties where the economic substance test is not met. An amount of administrative penalty of not less than dirham 10,000, AED 10,000, and not exceeding dirham 50,000, AED 50,000. In the first year. Increased to an amount not less than AED 50,000 but not exceeding AED 300,000 in the subsequent year, subject to a 6-year limitation period. Additional penalties such as suspending, revoking or not renewing the UAE relevant entity's trade license could also apply. Need assistance or advice? Contact RBS Tax Consultants. RBS and Abdul Rahman Auditing. Call us in 00971458399911. Mail us to rbs@rbsaccounting.com. Visit us at www.rbsaccounting.com. Thanks for watching. For more informations, log on to www.rbsaccounting.com.